All right, let's jump into things. Try and make this one a little bit quicker this morning, a little bit crooked this morning, but not to worry. It doesn't stop us from sort of looking over the charts. Unpack a little bit of sort of what happened last night. Well, say overnight kind of thing. So I shall flick across. We'll start on DXY because obviously this is the one that we've sort of been watching for, obviously always a bit of the main driver. And we sort of get absolutely crunched last night. And this was off the back of sort of weak jolts numbers. So the jolts, as you know, so it's the job openings. So you know what I mean. And it's the same with all these things. You sort of just have to play it out. And basically, anyway, long story short, they were expecting 8.09 million. Hold on, let me pop this on here so you can see it. Let's refresh this one. Where are we at overnight here? Get rid of this. This is the jolts just here. So 8.09, big miss to the downside. That's 400,000 jobs less than expected. And on top of that, in addition to that, you got a revision of 8.18 down to 7.91. So last month, basically, they're saying, oh, there were so many job openings. Now they've come in, they've revised that down 300,000. And then even after that, even if you sort of ignore what supposedly the market was expecting, you've slowed down even further with that. And so if we jump back onto DXY chart, you play these sort of things out and you sort of think, well, cuts are coming. We know this. We've been calling it for a while and that with the Fed. I mean, it's no sort of secret with it all. But now the question isn't so much as sort of like, are cuts coming? It's the question of, is it going to be 25 base point or is it going to be 50 base point? And it's the same sort of reaction. It's the same sort of thought pattern with these sort of things. It's just that the end result has shifted down. But whether it's, a hold and 25%, oh, sorry, 25 base point, or 25 base point and 50, it's still moving in that direction. So weaker data, weaker jolts, weaker sort of job advertisements means that sort of like, people, the economy's doing it tough. Like, you just got to think about these things logically. Sort of like, when a company's doing it tough and they're not quite too certain about the sort of, the future, or at least the sort of short-term, medium-term future, is that the time that you'd be like, yeah, let's hire more staff? No, it's not. It's sort of like, think about it on a smaller level, like your house budget. You know what I mean? Like, oh, I might lose my job next week. Do I go out and buy a new car? Well, no, you don't. You bunker down and you sort of work with what you've got. And that's why there's lower job advertisements. And this is why we got the reaction that we got with it all, because the idea is that, okay, well, if the companies are advertising less and just use the companies as like a snapshot of the entire economy, if they're worried at the moment and they're thinking, oh well, um, they're not too certain about the sort of their sort of outlook in the future. Um, so bear with me one sec. Yeah, sorry about that. What was I saying? Yeah, so the jobs and that sort of, as I said, less advertisement. They're not too certain about the future in that. So obviously, if the economy's sort of struggling a little bit in that regard, they're thinking, wow, we need to act more, i.e., 50 base point cut, sooner rather than later than holding on for a sort of 25 base point cut. And this is why, as we know, sort of like the bread and butter of a currency's strength comes from its interest rates. And if they're going to cut it by a larger amount, well, more people are going to get out. And this is why we saw an extreme sell down with DXY overnight. And if we look, so that's the sort of little fundamentals behind it. And now if we look at the sort of the technicals of it all, because it is actually sort of, it is respecting the chart. If we sort of flow this right through here and we sort of like, as I said, I've been doing this day in, day out through the, oh, I always do it day in, day out, but through this point and that, if you go through, you can see it as it's developed, and it is actually respecting the chart quite well, because we did start to form up this little channel, we broke it, came up here, unable to sort of get back underneath it, almost up to that sort of price target area. This is an area that we had marked out because, previously we look at it, we've seen selling happen in these areas and sellers came in here again. So this was always going to be a bit of an issue to get through this area here. Plus, we're very close to the underside as we go, if we really sort of play it out here, and we get back onto the dailies here, um, this zone here, this has got marked out. This is where the buyers have been, and even this long wick down here, if you really wanted to take that whole area, but this is the general zone area of it, we can see that this is where it's come back. And, this is the plan that we sort of made. We said sort of like, when we write down at the bottom here, you're going to come back up here, and then we're going to sell it back down. So this is the leg that we're in at the moment, this one coming through here. Now, this is a very important leg because this is the one that's going to determine, are we going to get a double bottom? Are we going to get a higher low? Are we going to get a lower low, a continuation? So move down like this. So this leg had to come. So it's no sort of shocker that, whether the data supports it or whether just the technical setup of it happens, that we get this move down here. As to how deep this comes now, this is where it becomes very important because, we knew that this little push up was coming. We know from this push up here, we don't know necessarily how high, like as I said, that's why we had the second price target up over here. We don't know necessarily how high this is going to come. We had a pretty good idea. That's why we had that price target there. But we knew this leg was going to come down here. Again, we just don't know now how deep is this going to come. And so this is what we're trying to sort of determine. And we're trying to sort of see, okay, well, it's broken through this channel. Had a little bit of this, which I'm not a big fan of this diamond top sort of thing in that. I'll actually probably delete this because I think it's a little bit irrelevant. This line here can stay because that gives us a little bit of a idea. See if it lines up. This kind of level here. So get rid of this one as well. Careful. So we broke the channel. We had a nice little support through here. You can see it held a couple of times. This is the resistance, came down here, tested it twice, held for support with the data. The data doesn't really care about your levels, and it just sort of cruised right through it. So interesting sort of with this as well, because last sort of thing just on the fundamentals with it is it's more in the sort of camp as well of what you probably call a sort of bit more of a hard landing. So you're going to see the rates cut. We know that. But under what conditions is really what's important. Not so much for the currency, because the currency, well, as I said, it's cutting, so it's going to weaken. Like that's pretty straightforward with it all. But then you look for the flows into other markets and where are they going to go? And if it's cutting because they're kind of scared, as in, wow, we really need to work hard, we really need to do this. The companies are doing bad. Well, not necessarily doing bad. Well, they're not doing great, but anyway, the companies are sort of struggling here a little bit. That's going to be in what's called the hard landing. And the hard landing is where you're going to see equity markets and that sell off. And it's going to be a risk off environment. So had they sort of like cut rates under better sort of conditions, you'd see equity markets hold up a lot better. And that's because sort of like, the fear isn't necessarily there with it. They're sort of thinking, look, wow, great, we're cutting rates. There's going to be more money in the system, more money to go around, more money into the companies. Companies going to sort of expand more, and we're going to sort of be able to sort of see better returns. And equity markets would sort of continue under those sort of conditions. But if the companies are doing quite bad and they're cutting because they're sort of like we need to act now because they're kind of behind the curve with it, then you're going to see a little bit of fear come into the market. So the flows will come out of your equities, most likely making that a little bit heavy. DXY, as I said, they're cutting. So, that's not going to be the sort of desirable location for those funds to come. So you've got to think, where's that flow going to go? And this is most likely where we may see some strong breakouts in, like metals and gold, because we're seeing yen sort of spring back to life. Because again, yen's been incredibly weak for a long time, so there's a good risk return from these levels. And if US dollar can't sort of hold itself as being the sort of chosen choice of risk off safe haven, then you're going to see yen strengthen. You're going to see CHF, Swiss franc, strengthen. Swiss franc typically sort of runs pretty much in sync with gold. because metals are going to run, or maybe gold's going to run, and that's going to put CHF to run a little bit more as well. So you've got to sort of think, okay, where are the flows going to go? Because if they're not sort of coming into, if they're coming out of the US dollar, and equity markets aren't necessarily the destination for them, well, you'll see things. Obviously, euro's the strong inverse relationship, so euro's going to get a punch up a couple of levels with this as well, up direction, not punch up as in get smacked. Um, but yeah, so that's my sort of feelings, and I feel it's sort of like, uh, depending on where this sort of ends up, we've got NFP on Friday, but these things could very much sort of be the catalyst for gold to get its sort of major breakouts. And gold, for the most part, is holding up very, very well, which I'll have a quick look at now as well. So actually, sorry, 2 seconds. Let's jump back on this real quickly. What are we looking for here? We got the 50% retracement. It's holding for a little short-term support. We can get rid of this now. This is the price target from when we were way up over here. So actually what we'll do, let's just drag them across. Because that was it there, more or less. Anyway, actually no, let's get out of there. We all know we hit the price target. We got a tight little range setting up on the 50% retracement here. So this is going to be your breakout for a next leg down. So let's just make it a little zone here. So if we go underneath this level, we're sort of going down. If we come back up here, I think you're most likely going to be at least first time touch capped at this little resistance area where we've seen these sellers and buyers be before. So I wouldn't be surprised if we see a little bit of a sort of attempt to even just sort of suck people up here. This is on the 4 hour. It's pretty heavily oversold. So I wouldn't be surprised if we see a little bit of a drive up here, but ultimately, more likely, I think we're going to see this little down channel scenario kind of continue. If we do break below it, then you've got the bottom side of potentially this, but if we come through to it quickly, I don't think this will hold. So you're looking maybe the 61 or maybe just down this 101. I don't think we're going to get any major breakouts as in like sort of coming down out of here at this time. So really it's just see what they do with this little short-term little sort of rally area, short-term support area. Okay, flip across gold. And gold, as I said, it is holding for now. So look, it's come down here, and this is the reason we mark these things out, because we've seen buyers have been sitting here, they came to the party again. This has really held quite well a couple of times, and it's funny because it's almost lining up very well with where we had this other little zone through the middle here, as to sort of where the candles close. So it's kind of comes down here, grabs some liquidity, fires back up. Down here, liquidity, fires back up. Getting actually back up above this previous high here and out of this little channel bodes pretty well for it. But realistically, if you're looking for longs at the moment, above 25.08 would give you a little bit more surety. I wouldn't be surprised if we do sort of get a little bit of a back test down here. Again, look, in the 80s, I picked some up in 82 at 82 yesterday. I got off in mid 90s. What did we get up to? Yeah, 25. So I didn't quite maximize that, but a little return there. A little bit of a sort of back test down here. As I said, this probably may sort of line up with what gold, a little bit under the weather here, may line up a little bit with a short-term little push on DXY, as I mentioned before. If we see that, we may see a little bit of a liquidity grab back down into the low 80s again, before sort of pushing up towards that mid-range part of this major sort of consolidation. Look, the bigger picture with gold at the moment is the fact that it's in this range and it's consolidating tighter sort of range, but it's holding out the top side. You break out, this is your big breakout level here. And as you can see, the measured move of this range comes up over here, and you could probably almost sort of see, I wouldn't be surprised if this almost lines up as well. If we sort of go the highs to the lows there, then we go measured move on this. And a measured move out of the top there. Doesn't quite get you up there, but it certainly has a nice sort of push up to the top side. And this is the measured move for the range here. Of course, you break down to the bottom side of this down here, it's looking pretty ugly. But as I said in the last couple of videos, I do believe anything that comes back into this area is just going to be one large major liquidity grab before going back up to the top side. So ultimately, I am still looking long on gold, on our metals, but there could be a little bit of stuffing around. I don't believe that we're going to get this break down to the side down here, so I'm going to get rid of these just for now. The here and now, I wouldn't be surprised, and if I can, I'm going to pick up some more in the 80s, and then sort of look to see if we can have a test for a breakout over 2507 and get back into this top little part of the range, because as you can see, it was sort of really 28 to 03. This was the tight little sort of range that we could see it was trying to hold this little area through here a bit. So it's going to be a bit of an issue to get through there. But if you can get through that, then you're playing around with, all-time highs, 2530s and 2507 thereabouts for the support of that range there. So we'll see how this sort of develops through Asia. Aussie bounced back off after that news yesterday. As I said, I was doing the video and the analysis and that sort of through while this was sort of happening, and we could see showed that it was kind of front running that data, just in case it sort of did come in weak. Ended up coming in as expected. So as expected is still ultimately weak, but it was exactly that, as expected. You get people front running the position just in case it came in even weaker, and we would have seen a big sort of careen down here to our price targets, and we would have been able to pick up some in sort of like mid 64s. But as it was, that buy zone held. We took out any kind of little bits of liquidity down here. I actually got some of mine off at 89, I think it was the best one that I got. So it was right near the bottom here. So that was a pretty good sort of exit for the shorts. We sort of came back up, and this little push up here was through the same time that you had that jolts data come out. As you can see, it's sort of like, it's really just come up to this area where it was trying to find a little bit of resistance prior and completely smacked on the nose. So as to sort of where it's sort of got to go now, it's very wicky on both sides, and that I think really ultimately sort of see Aussie's a bit of a funny one because yes, it's matched against the US dollar, of course. Well, in this instance, it is. So weak US dollar should give it a boost because obviously weaker dollar, well, the two are sort of balanced against each other. But as I was saying before, you got to take into account the risk factor. And Aussie also has that extra bit thrown into it, whereas sort of like if equity markets are freaking out and selling off, Aussie's very sort of vulnerable to risk. And it's very much a risk associated asset. So as that sort of gets shaken a bit, like if it does the equity markets, then you're going to see that affect Aussie as way on Aussie as well. So Aussie's big sort of thing was that we had Bullock in there. She's like, yeah, look, we're going to hike rates. We got Fed cutting rates, and we just kept charging. Obviously, this has had the little technical breaks, and we've sort of come back here. We're still only at the 23% of this large move from the lows, though. So it's still in a very bullish momentum, even though it sort of looks like, oh, it's come back a little bit off here. You got to remember how far down it actually came from in this move. And the move that has sort of come up here, as you can see, I've sort of marked it out, 7.5%. So giving back sort of 23% is not really much at all. So I do want to ultimately get long on Aussie, but all things sort of considered, I would like to possibly sort of get, as I said, down into these 66 average. Now, just because I want that doesn't mean it's going to happen. But I do believe that we may have a little bit of a shake of fear, which may sort of see Aussie stay under pressure at least. As to whether we break these lows, well, that's a different story. But I don't think it's necessarily, and I could be wrong. I could look at this tomorrow and we could be back up here at 67.80. But I think we may be sort of weighing on it a little bit down here, which could give us some more entries for potential longs before we do see the move up here. But I think ultimately, once it does cut, the US does cut, I think we are going to start to see some further appreciation in Aussie. As I've said a couple of times, I still believe that we have the sort of new yearly highs to come. So a little bit slow this morning. This is the move that I'm looking for. As to whether this comes up to this level, that's just showing the direction of the move. But as you can see, very strong. It's taken a little bit off. Have a look on the daily. I mean, the daily's still got a little bit of room to move to sort of come down over here. If this can sort of come back down here and then sort of move along and then move back up like this will sort of be about the same time that we get this pullback and a push through to the new highs if that happens to sort of play out. All right, on to copper. Copper is it's hugging that buy zone. So I took a couple of positions in copper. I got rid of I think two of them just for some little scalps and that, just to sort of bank some. I'd like to sort of see it take out that wick now, but it is good to sort of see that it is holding. Let's get this out of the way. It is holding this structure very well. We've got the falling resistance here. It's broken out. It's come back in here. This is why I had the buy zone down here, because I said, look, this is a better risk reward. I said we were going to have some issues up here because of this is where we've seen the buying happening. And there it is. Again, it's the same thing every single time. Support resistance, same thing. So these people, they're like, all right, sweet, let's get out. Boom, 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 boom. Back down here. Much better risk reward from here than it is from up here. I mean, we're talking sort of over 2,000 points back down to this buy zone here. This could still dribble down and come back down here and give you a bit of a double bottom sort of thing. Like, it doesn't mean this has to hold, but at the moment you can see that the market is agreeing with this zone as a potential area, at least to sort of suck up some liquidity before it sort of tries to sort of maybe have a next bit of a rally. We know where the breakout point is, which is above here. So again, this is the structure, sort of moving up, moving back, and then moving up here. And we get the double top. Oop. What's this thing here? Moving up, moving back, and moving up here. Let's get rid of this one. So the question is, does this come back down here? Does it sit in our buy zone? Respect this previous sort of falling resistance now as a falling support? And do we get the launch back up over here? So I think it's a pretty good risk reward from this area. So I'm going to be holding these positions for now. Flip across, and we just got China. So China's look. This is the thing. This is why we map these things out. We had the major break, so we're going to come back up here, and now we're sort of getting the data and everything to support it to get it to roll over to come down here. So this is in this leg now. So we've moved up. You got your resistance in a known sort of previous support area. Now we're moving back down here. Now we see, is this going to be confirmed? And if you get a break underneath, well, realistically, probably now a break underneath that lower wick, 7069, that's going to sort of trigger out, and that'll give us sort of 7 for our sort of touch up there. Again, you know, if you're trading Aussie, it's worth keeping an eye on this. And I need to sort of be a little bit more up to date with my sort of China news, because I'm seeing sort of mixed stuff coming out with them at the moment. Like, we're seeing sort of like some reports sort of saying that they're springing back to life and they're doing quite well, but then you're seeing other things where they're still struggling very hard. So I need to sort of dig a little bit deeper into that, because obviously sort of like, you know, stronger China means stronger Aussie, and that's what's going to give us our kick. But, you know, China, as you can see, a number of times looks like it's about to fall and then just grinds. But, you know, overall, this is the flow. It is sort of coming back down over here. It's just a matter of whether they try to jam things up a little bit further first. All right, so flip across, got the news quickly. As I said, we had jolts overnight. We've got a bit of Aussie data coming out in half an hour. So we've got the trade balance expected to tip down. So again, sort of if that does come in a little bit lower, I don't know how much of this is necessarily priced in. It's not a big mover necessarily of the markets. So if that does sort of tip down a little bit lower, then we could sort of see sort of Aussie sort of remain under pressure. I don't think that's going to be the catalyst or anything for it to like sort of, wow, here we go, we're selling off because of that weak data there. But again, it's part of the puzzle, and you've got to plug these things in. Bullock talking at 12. I've got no idea what she's talking about. That shows that I'm up to date. And again, look, I mean, she has a pretty sort of hawkish sort of view, or a hawkish tone typically, which kind of sort of helps sort of keep Aussie quite sort of buoyant, as we've seen recently. But, you know, given sort of that sort of weak GDP data, I think that's going to be part of the conversation. As to whether she's answering questions or just speaking, I'm not quite sure again. But I think sort of like she's going to have to address that sort of weak sort of GDP figure because now you're seeing all the sort of all the heads on TV piping up and sort of saying, oh, we've got sort of I think 6 quarters or something. It's like a record length of per capita household recession or something. I don't know. It's a cutesy sort of way of saying it. I mean, as I said, you just got to trade off the data that's presented to you in that. But as to how people interpret it, that's what you got to be kind of a little bit wary of. Excuse me. And a big day for her. She seems to be speaking again at 7 o'clock tonight. Not quite sure why this is a low and this is a high, but yeah. Moving through, we got ADP tonight. ADP, I feel, is always on the Wednesdays. It's a Thursday today. Yes. Yeah, it's. I always thought the ADPs were on the Wednesday of NFP week, so obviously the first of the month. But yeah, that's the private sector. Can be a little bit of an indicator of what's going to be happening with NFP, but the correlations I don't think are super strong. You are seeing a little bit of a tick up here. If we do get a tick up here with this and that, that's going to be obviously in the camp of a little bit stronger for US dollar. You got normal unemployment claims coming in as expected, or as previously, sorry, expected to be the same as the previous. And then, as I said, big one is NFP, and these are super, super low numbers. If you have a look back at click on this, it'll show you some of the other numbers we've had. You know what I mean? Where we are. So 164. So look, the expectation is actually up a fair bit here. But as you can see, everything's always revised. I mean, revised down 30. This one's revised down 60. Just 10 for this one. This one was revised up 10. So, the big question is sort of like, how much can you really believe these things? But as I said, you just got to trade what the data is. Whether it's real or not, the markets are going to react on it based on they're going to give them the benefit of the doubt and say, yes, they are real. So that's all we can do is trade those ones. All right, that's it from me. Ciao.